So the Reserve Bank cut the official cash rate to 5.25%, the first cut since March 2020. In its monetary policy statement issued yesterday, the RBNZ said annual inflation, currently at 3.3%, was returning to within the 1 to 3 target band. It warned that the pace of further easing would depend on inflation remaining anchored at around 2%. Banks have already priced in a cut to the OCR this year. They're dropping long-term fixed rates to below 6% in recent weeks. So what does this all mean? Is this a surprise? Let's check with a good friend of the show, always very informative, wearer of acid-wash jeans and prides himself on being one step ahead of the curve, but didn't call this last time we spoke. Property commentator Ashley Church joins us again. Ashley?
How are you? What a shock. What a shock. Hey, I have to say, I've never been so pleased to be wrong.
Yeah.
Very surprised.
Wow.
Very
surprised.
Yeah, I thought he'd go another 3 months, and he would, on the basis that just his indication that rates might drop would be enough to do the job. But no, he's gone a step further. So good stuff.
I mean, it is good, but this obviously is a significant change from the last full update from the bank in May, when it said its monetary policy committee had discussed the prospect of another interest rate rise and did not expect to cut until this time next year. Why the flip-flop, Ashley?
Some of it's hyperbole. So at any given announcement, some of it's hyperbole, some of it's designed to get a particular reaction at a particular time, and I suspect that's what was going on back in that previous announcement. But here, I mean, you can only read this to mean that from the Reserve Bank's perspective, that the signs of the economy going into an even deeper recession are scary enough for them to consider that this is more important than the prospect of maybe overshooting the inflation mark. Because the concern I had when you and I talked last week was that if they did this too early, keeping in mind that inflation hasn't got down to 3% yet, that they may not actually meet that target. So clearly they've decided that even if that risk is there, that the risk of the economy going into an even worse shape than it is now has outweighed that.
So for the Reserve Bank to then basically ignore their forecast just 3 months ago, is it, and this has been a call by some, can we trust their judgment going forward?
Oh, well, that's a really astute question. No. and that goes back. I mean, that's not just the last couple of announcements. That goes right back to 2020 and the complete mess that Orr and the Reserve Bank made of what they did with the economy at that stage and what they did with lowering the cash rate to the point that the economy got overheated and went into overdrive. So no, you can't trust them, or you can't trust Orr. And no. It'll be interesting to see what happens over the next 3 or 4 announcements. I noticed that one of the things came out of this was that they were predicting that by December that the rate will be down to 5%, and that by midway through next year it'll be down to 4.5%. So that's a pretty rapid trajectory.
Got it.
Yes, and if they follow through with that. Then that'll obviously have a commensurate impact on interest rates as well. There is a difference here, though, Leah, and that is that if you go back, 8-10 years to previous Reserve Bank governors, whatever they said, basically you could absolutely rely on them. So whatever pronouncement they made, that was what happened. That's not been the case with the Reserve Bank over the last couple of years. They've said things in one announcement, and then 3 months later, as you've quite rightly pointed out, said something completely different.
Yeah. So homeowners, businesses, politicians hope this decision marks a turning point then in our economic fortune. Do you think it will?
I do think it will for a couple of reasons. One, in practical terms, the banks will start dropping rates now. They've already done so, and I expect to see that go even further. So that'll have an impact just in relieving some of the pressure on households and on businesses.